What is going on, everybody? And in this video, we're providing a state of the market and stock picks for October 21st, 2022. So if that sounds like something you're interested in, consider subscribing, as we do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. Now, as you can see on my screen, we have Snap, the all powerful Snap. For some reason, this company, all by its lonesome, is taking down the market quarter by quarter. Now, at one point, Snap was good company. They were doing very well. And then Apple put the old kibosh on that, locked it down, and Snap went tumbling down. So much so that it has been absolutely wrecking and wreaking havoc in the market over the past year. Being said, ad revenue is still struggling, which is funny because Netflix ad revenue was very good. So, being said, it still I think goes back to what was going on with Apple and the way they locked it down. Snap really had to approach it differently because of that. I don't think they still solved the issues on that aspect, but and nonetheless, a lot of people came back to Netflix and understand that people watch a lot more entertainment than go on social media. So there's good reasoning behind that. But the next things to really watch out for is Google and Meta. Google obviously has YouTube, a big component of what they do. They do run ads. Now, the big problem being is that they weren't running as many ads because of the fact that people just weren't paying for ads because they couldn't afford to pay for ads. And so that'll be what's interesting coming in. It could be destruction for Google, or it could not be. It really just depends on what happens. But more than likely, it will see, I think, some of the onslaught of what we're seeing with Snap, because Google did sell after hours as well. So in Meta, again, another big component. This is also why they're rebranding and trying to get into the metaverse. But with all that being said, this is just the beginning. I think we're trying to find that next leg down. The market tries to run up. There's been a lot of hopium pumped into the market by the media, by you know Fed members, by a lot of other foreign banks buying bonds. For you had the UK or Bank of England buying bonds with no real true backing on how they were going to do that. And then you also had Japan buying bonds today as well, with no true understanding about how. But they are essentially in a state of emergency, and I don't think that's what people understand here. Is a lot of these financial systems are in deep trouble, and they're trying to keep it afloat, and by doing these temporary pumps that are very weak in nature. They do have a big pump intraday, um, but most people don't watch intraday. I do, but majority of the time, a vast majority of people do not. And so, with that being said, these pumps, they're very short lived, and I think it's only going to be a matter of time for it collapses. And then on the same token, we're getting more housing data, which is showing more. I think it's 1.4, another decrease in sales today, I believe it was. So you're seeing more and more the cost of homes is definitely coming down. Something I've talked about in the housing sector. It takes a long time for that rotation to play out, but it is coming down a lot. And understand that, again, people are trying to liquidate. Now you're getting a massive amount of supply. People still think we're at the peak of the market, so they're trying to get top dollar. Soon realizing that they can't get top dollar. It's extremely hard for someone to get a loan right now. So now, if they do lose their job, they cannot liquidate. And so either one, they have to drop the price a lot. Hopefully not going bankrupt in the case, and hopefully not ending out looking on the street like everybody else, looking for a rental, and realizing that the rental situation is going to continue to be a big issue moving forward until rates start getting dialed back. Fed members, there's been people talks that we could hit peak rates. I don't think we've hit peak rates yet. I think we still have quite a bit to go. Um, I do believe we will come over 5. If we do come over 5, realize the average to come out of a 5-point rate increase, it takes about 10 years. So it does take a long time. Again, everything that's on average, again, every situation is different. Could move quicker, could move slower. But this is a behemoth of something we were waiting for 2 years when we were spiking and coming out of the drop out of the pandemic. This is again what happens on the back end of that, and we're dealing with it. So again, a lot of people want to talk about elections. That you're right, there's like 2 weeks away, roughly 2.5 weeks away. That's great and all, but again, this is not a normal cycle you're dealing with here. So there's going to be a big difference. But nonetheless, I wanted to bring up Snap first, just so you can see the massive dive on this thing. Again, from close essentially to currently where it is now. Let's see how big of a drop this is. You could play continuation on this. It's already taken such a massive hit that I really don't know how much of a continuation this thing's going to have tomorrow. It's already 28%. That's absolutely ridiculous on Snap. So just be mindful again that I don't know how much more this is going to sell, although you're going to get some fear and panic in ones like Google. You're already seeing Google. Google took a heavy hit today as well. Let me just pull that up real quick before we get into our normal thing. Not nearly as massive. Again, why it did a stock split. Nonetheless, it helps with these drops, as you can see here, or else this would have been massive, a bigger drop if it hadn't been the shares hadn't been so diluted. So that being said, we'll have to see what these open up tomorrow. Again, ads are definitely going to be on watch moving forward. Tesla, again, showing sign of weakness is not good going into just starting this out. And then Snap, obviously being Snap and ruining everybody's day. So again, next week will be the bigger earnings. We got a lot more bigger earnings. Big tech. Once after big tech is done, there's a lot of other earnings, but nobody really cares. Market really isn't going to move off of other earnings. It's more big tech. Once big tech is done with its earnings, earnings are pretty much done from that point. So you can play continuation on a lot of different ones, but again, the pivot that will come out of an earnings will come out of big tech. So with that being said, let's get into our regular spiel here. The market itself, it's sold off. Again, it topped out roughly 37.31 and then just started to sell off pretty heavy. The UK minister resigned as well after I don't even know how many days in the office. I think it was like one of the quickest turnarounds ever. And she'll remain in the office until they find a replacement. But nonetheless, she was in there long enough to get pension for the rest of her life. So that works too. But nonetheless, interesting to see here what happens. Again, I think if you ride this Fibonacci sequence currently right now, I think we could fair market value to buy to the long side. Again, you won't really see that till you start hitting roughly around this 35.75. So I think we could potentially drop quite a bit tomorrow. Again, we have that support roughly. The monthly support's been floating around that 3,600. It's been a real battle. That 36.15, it battles a lot there. But if it does break that, if we gap down to that tomorrow, we'll see. We could pop and then drop. But we're really watching that 3,600 tomorrow. If this thing doesn't gap overnight, and see what happens, especially with Google and everything else. Google does have a lot of weight in the market. Meta does as well. So we have to see how they do in the morning. Tesla absolutely tried to bounce today and then just absolutely no power. It is holding very good at this 205. So as long as it can hold the 205, but if by chance it breaks the 200, this thing is going to sink pretty hard down at 185. So really watching that. If it does break down, I definitely want to grab it at these lower levels. Again, I'm watching that one more leg. If I can get one more strong leg down is really where I want to start buying. I'm slowly buying stuff now, but I want to wait for that bigger leg down coming up in this next potential wave. So watching that. BA BA looks like it's ready to turn over right now. Again, if it could break the 137, I think we're going to have a bounce here at the 135. But again, if it breaks that, you can come all the way back down to 127. Again, not a huge fan of BA, but it's good to know what it's doing because it's kind of gives you an idea what value is doing. JPM, again, this thing looks like it wants to roll over. If it can't hold roughly the 115 tomorrow, this thing can come all the way down, catch a bounce at 112, so you can get a pretty big gap if it doesn't gap down overnight. But then again, if it breaks that, we're coming all the way back down here. I think, in my opinion, to 102 for JPM. GS, same thing. It looks like it wants to roll over. If it can't hold the 309, I think you're going to break. Again, you got some support at 302, but again, I think it'll be back down here at 291. So really watching that. And then Google, I'm bringing this one up just because of what's going on with Snap. I haven't really played Google since the split. Again, the split has really kind of made these things horrible to trade, and not as fun to trade as they once used to be. So we definitely have to see what this one does tomorrow. If it can't hold, so roughly tomorrow, if this thing can't hold the 97, again, I expect it to be down here at the 95 tomorrow. Again, it's diluted, so again, the moves aren't as great as they used to be. You have these one big spikes, and then it's pretty much what you have. But it's pretty much been the rest of the market. The market gets these spikes, and then it pretty much doesn't do anything after that. So watching that, we will see. That's pretty much what I got. Tomorrow is Friday, so just be mindful of that. Be careful, manage risk. Let the market show you. The market's been really sloppy and sideways for the past couple days. Matter of fact, we got about another week, I think, before monetary policy. Another 2 weeks or so, roughly. I think we got about another week and a half before monetary policy. If the market was going to rip, it needs to do it now before going into there because another 75-point basis move, 100-point basis move is just going to strike more fear in the market. The market's not going to like it, and we're just going to continue to see more chop that we're seeing now. So I'd rather the market see something, maybe hopium something, just to move, as opposed to this chop that we're currently seeing. So nonetheless, be mindful, be nimble, manage risk, and I'll see you guys on the field.